morning, everyone. This is Anthony, Wall Street Trader. It's 9:58 a.m. Eastern Standard Time on Monday, June 21st, 2021. This is not financial advice. The video is intended for educational purposes only. There's a Twitter link below. If you click on that, you'll get all the intraday updates you'll ever want between this video and tomorrow's video. If you want to stay up to date with my latest videos, click the subscribe button below with the little bell next to it so that you're notified when these videos come out. Okay, currently, the graph. I'm in at 81.4 cents per graph coin. That means that I'm not going any further into it. I've got 100% of what I wanted invested into it. I've layered in across these entry points. Now, the market taking a big hit today, no doubt about it. I'm down on my investment, as with all of my cryptocurrency investments lately. But that's not to say that we have that we're in dire straits here. Now let's take a look and get a more meaningful, knowledgeable view of the market, because we can't sit here and run for the hills, because that's what the novice investor will do. That's what the uninformed will do, and trust me, they'll be kicking themselves later. But that's just my view. Again, not financial advice, just telling you where it stands. I don't know your situation. You may need money right now and you're playing around the crypto market. I don't think that's a good idea. But if you're a long-term investor and you can lose money, and it's okay if you whatever you have invested that you would lose, and you'd be okay after that, and you have no problems with losing it, then it's a good place to be. But let's go through the graph relative to US dollar. Right now, massive pressure today, down to 52 cents at one point, back up to 56 and change. Now let's take a look at what the underlying crypto pairs that drive this graph to US dollar are, which are Bitcoin and the relative strength of the graph to Bitcoin. So this is the graph US dollar. This is on the left side of the equation. This is the output. So this Bitcoin multiplied by this graph strength to relative to Bitcoin will equal this output. So let's get into those inputs. So one of the inputs is the graph relative to Bitcoin. We're still kind of like around here, like nothing's really that dire straits. The inner strength of the graph is still intact, as are some of these other altcoins out there. The inner strength is still intact. The reason why their corresponding US dollar pair is getting crushed today is primarily because of the Bitcoin move. We already saw a negative Bitcoin move yesterday. We're seeing it again today, but we kind of rallied back a little bit here. Let's look at what's driving and what's going on in the Bitcoin market. Well, Bitcoin right now is at 33,000 roughly. And we were down to 31 and change just earlier. So look, we went all the way down here, 31.8, and now we're back up to 33 and change. So let's see how it plays out. Like the way I'm looking at this is very simple. These death crosses that they talk about have been they have not been consistent. And by the way, they are lagging indicators. So it's the death cross, to remind everyone, is when the 50-day moving average crosses below the 200-day moving average. The green line, the green curvy line that you're following with my cursor here, is called the 50-day moving average, which is just looking back 50 days, adding up all the prices for each day, the closing prices, and then dividing that by 50 to get an average price over the last 50 days. And the 200-day moving average is just the average of the last 200 days prices. That's all it is. So look, over here, we went down, but we went back up again. Same over here. Here's another death cross. In fact, in this particular case, if I plot where we were at that death cross, we actually went up the whole time. So it's not very consistent. It's not a consistent indicator. It works some of the time. It doesn't work other times. It's like, it's lagging. So the way I look at this is very simple. I would take it with a grain of salt and look at more of the macro what's going on view, rather than just hearing death cross and getting scared, running to the hills, which is what most people who are uninformed do. So let's just take one quick look at the bad news as to why the big drop. Well, the uninformed money is leaving Bitcoin because they hear a headline like this: Bitcoin drops as China intensifies crypto mining crackdown. That's what the headline is. But guess what? Who cares? That's actually better. Reducing supply is always better for the underlying commodity. Look at oil. When the cartels stop supply, oil goes up. What happens when gold miners can't find much gold? Prices of gold go up. Any commodity, think of anything where things start not, the supply is shrinking, prices go up. Look at the COVID environment. When toilet paper, the supply, they couldn't print enough toilet paper to wipe everyone's butt. That stuff was started going up in price. Everything was going up in price. And believe me, Purell bottles were going up in price because they couldn't keep the supply up with relative demand. The demand is there for Bitcoin. The institutional and smart money demand is there for Bitcoin. So the people running for the hills is a short-term impact on Bitcoin, is my view. I think over the long term, the smart money understands that mining, slowing down mining is economics 101. Supply reductions equal price increases, as we will see. Now, let's let the dumb money leave, or I would say the uninformed money leave. Not everyone's liquidating because they're dumb. It means that some people don't know and some people do know. For those that do know, they have to liquidate for other reasons. Now, let's take a look at MicroStrategy. Here's smart money. They are layering into the trade. They bought another $500,000 at around 37,000 per Bitcoin, and they will continue to layer into the trade. And trust me on this one, they will continue to buy the Bitcoin US dollar pair all the way through, as long as they want to and as long as they can, right? They are definitely in it for the long term, and I think that they're onto something. Now let's look at Paraguay. Paraguay is starting to adopt Bitcoin also, aiming to make Paraguay a global crypto hub. This is big news, folks. If it's happening here in the States, and if these miners leave China and they come to Miami and Texas, well, let me tell you something. Bitcoin ain't going anywhere. And by the way, China, they own $1 trillion worth of treasuries that are redeemable in US dollars. So they're worried about the US dollar getting decimated because of Bitcoin's proliferance. Well, who cares? They're not really going to be able to stop the train. They're just trying to slow it down so that they can redeem out their bonds. And that's fine. They have a vested interest, believe it or not, in the US dollar because they have a lot of money in US treasuries that are dollar denominated. So, just understand that. I think it's important to know kind of the backdrop of what's going on behind the scenes. Anyway, Bitcoin's still at 33,000. It's not crashing down. It's like, look, we're in this corrective period here. It started back in May, almost a little over a month ago, and we've been oscillating since. I don't see this going on forever. Let's see what happens. Keep your eye on Twitter, and I'll tweet out any major market movements from there, and have a good day. Take care.